If you drive for Amazon Flex, you're running a small business whether you realize it or not. And that means you're leaving money on the table if you're not taking advantage of every deduction available to you. In this video, I'm breaking down exactly how Amazon Flex taxes work in 2026, what forms you need, and the deductions that can save you thousands. Let's get into it. First, let's be clear about your tax status. As an Amazon Flex driver, you're an independent contractor, not an employee. Amazon doesn't withhold any taxes from your payments. No federal income tax, no Social Security, no Medicare. That's all on you. This is different from working at an Amazon warehouse where you'd be a W-2 employee. As a Flex driver, you're self-employed, and you need to handle your own taxes. If you earned $600 or more from Amazon Flex during the year, you'll receive a Form 1099 NEC. This reports your total earnings to both you and the IRS. You can download it from taxcentralamazon.com starting in late January. Important note, even if you earned less than $600 and don't receive a 1099, you're still legally required to report that income. The IRS expects you to report all self-employment income regardless of the amount. Now let's talk about what you actually owe. As a self-employed driver, you're responsible for two main taxes. First is self-employment tax, which is 15.3% of your net earnings. This covers Social Security at 12.4% and Medicare at 2.9%. At a regular job, your employer pays half. As an independent contractor, you pay the full amount. Second is federal income tax based on your total income and tax bracket, plus state income tax if your state has one. Here's the rule of thumb. Set aside 25 to 30% of your Amazon Flex earnings for taxes. This gives you a safe cushion for self-employment tax plus income tax. If you spend everything you earn without setting money aside, April will be painful. If you expect to owe more than $1,000 in taxes for the year, the IRS requires quarterly estimated tax payments. For 2026, those due dates are April 15th, June 15th, September 15th, and January 15th of 2027. Missing these deadlines means penalties and interest. Now, here's where Amazon Flex drivers can save serious money. Let's talk deductions. The biggest deduction by far is mileage. In 2026, the IRS standard mileage rate is 70 cents per mile. This single deduction covers gas, oil changes, tire wear, insurance, depreciation, and general vehicle maintenance all in one calculation. Here's the thing about Amazon Flex. You drive a lot of miles. Between driving to pick up packages, delivering to multiple stops, and driving back home, those miles add up fast. Let's say you drive 800 miles per week for Amazon Flex. That's about 3,200 miles per month, or 38,400 miles per year. At 70 cents per mile, that's a $26,080 deduction. If you're in the 22% tax bracket, that saves you nearly $6,000 in income taxes alone, plus it reduces your self-employment tax too. But here's the critical part. Amazon Flex does not track your mileage for you. The app shows your routes, but it doesn't give you a mileage report at the end of the year. You need to track every mile yourself. Use a mileage tracking app like Stride, Everlance, or Mile IQ. Turn it on when you leave for your first block and keep it running until you're done for the day. Without documentation, you cannot claim this deduction. Your second major deduction is your cell phone. You use it constantly for the Amazon Flex app, navigation, and checking for available blocks. If you use your phone 60% for flex work, you can deduct 60% of your monthly bill. At $100 per month, that's $720 per year. Third, any equipment you buy for deliveries is deductible. This includes phone mounts, portable chargers, flashlights for night deliveries, rain gear, a dolly or hand cart for heavy packages, and bags to organize deliveries. Keep all your receipts. Fourth, if you pay for parking during deliveries or pay tolls on your routes, those are 100% deductible. These costs add up, especially in urban areas. Fifth, you can deduct car washes if you keep your vehicle clean for work. Some drivers also deduct a portion of their car insurance beyond what's covered in the mileage rate, if they have commercial coverage specifically for delivery work. Sixth, if you use a portion of your home exclusively for Amazon Flex business, like organizing your schedule, tracking expenses, or planning routes, you may qualify for the home office deduction. And remember, you can deduct half of your self-employment tax on your income tax return. This is an above-the-line deduction that reduces your adjusted gross income. Let me walk you through an example. Say you earned $35,000 from Amazon Flex in 2026. Before deductions, you'd owe about $5,355 in self-employment tax plus income tax. But let's add up your deductions. You drove 35,000 miles, which is $24,100 at the 70-cent rate. Add $720 for your phone, $300 for equipment, $200 for parking and tolls, and $280 for other expenses. That's $26,000 in total deductions. Your taxable income drops from $35,000 to $9,000. Your self-employment tax is now only about $1,177 instead of $5,355. You just saved nearly $4,000 in self-employment tax alone, plus significant income tax savings. This is why tracking matters. The money is there. You just have to document it. When it's time to file, you'll need these forms. Schedule C is where you report your Amazon Flex income and deduct your business expenses. Your net profit flows to your main tax return. Schedule SE calculates your self-employment tax based on your Schedule C profit. And Form 1040 is your main individual tax return. If you also have a W-2 job, your Amazon Flex income gets added to your other income. You'll still file Schedule C and Schedule SE for the Flex portion. One more thing. If you use your car for both personal and business purposes, you can only deduct the business portion. That's why tracking is so important. You need to know exactly how many miles were for Amazon Flex versus personal driving. The IRS can ask for documentation. If you claim 30,000 business miles, you need a log showing those miles. A mileage app that tracks your routes automatically is your best friend here. Here's your action plan. Download a mileage tracking app today and use it for every block. Set aside 25 to 30% of each payment for taxes. Make quarterly estimated tax payments to avoid penalties. Keep receipts for all business purchases. And consider using tax software designed for self-employed individuals or working with a tax professional. Note, this information applies to US-based Amazon Flex drivers. Tax laws vary by country, so international drivers should consult local tax authorities. If this helped, subscribe for more gig economy tax tips. I've got videos on DoorDash, Instacart, Etsy, and more. Drop a comment if you have questions, and I'll see you in the next one.